Very good morning, guys. Yesterday, the market did the one thing everybody had stopped expecting. It climbed back about 24,000 and closed there at 24,006. The level that broke last week is back under our feet, and this morning we are set to open a clear 150 points higher on Sensex expiry. But don't get comfortable yet, because today two big events land on the very same day, one during our session, one after our close. And when two catalysts stack on top of each other, the market stops trusting the calm. This is the Tanmay Edge. You are listening to uh, Tanmay Gurtukoti, Season 2, Episode 72. Let's go. Starting with outside India, overnight, the US gave us nothing. The Nasdaq slipped again, down about 0.7%, a second soft session for tech. The S&P eased a touch, and only Dow futures held barely green. So the tech tailwind has gone quiet 2 days running, and that matters because our own IT pack is still the weakest link in the market. Asia this morning is split. Hong Kong firm, but Japan, Taiwan, and Korea all are heavy, with Korea off nearly 3% down. Crude keeps drifting lower. Brent is near $71. The US crude closed to $68, and the US Iran keeps talking. Cheap oil stays a quiet tailwind for us. Gold eased overnight back to about 4,050. But here's the number I want you watching: the rupee. Yesterday it weakened. It slid to about 95 and a quarter against the dollar, its softest close in a while, and is now sitting right on top of that 95 line. A weak rupee is one of the things that keeps foreign money nervous, and a push towards 95 and a half right into tonight's job number is exactly what nobody wants to see. And now, the number that sets up your whole morning. Gift Nifty is up 140 points, trading around 24,183. Strip out the premium and the points to Nifty opening near 150, a gap up of roughly 140 points. So today we don't just hold about 24,000, we open a clear 140 points above it, right underneath the 24,200 resistance. And notice what that means. The US gave us nothing overnight, yet we are gapping up anyway. This move is our own market doing, not an import. The question today isn't whether we get back to 24,000, it's whether we can hold this gap up and take on the 24,200 level with the job numbers waiting for tonight. So, what are these two events? The first is today is Thursday, Sensex weekly expiry is there. The weekly bets on Sensex settle this afternoon, and that pulls the index towards the level where the most of the money is parked. The second is bigger, and it lands after we have gotten home. Tonight, the United States releases its monthly job reports, and this month it lands a day early on Thursday because Friday is a US holiday. That number decides what the US central bank does next with interest rates, and it moves everything. The dollar, our rupee, foreign flows into India, it drops after our market closes, which means today our session doesn't get to see. It can only brace for it. That's the setup: an expiry that pulls us sideways during the day, and a coin flip event hanging overnight. Two hands on the wheel. Now, the part that matters most: who actually moved the money? In order that counts, the pros came into July leaning up, and yesterday they pressed the bet harder. They are net long the market through futures. They piled on the big stack of fresh upside bets on top of it. But this is the tell: they kept their downside protection on the same time, long the market and insured via options. That's a desk that wants higher but refuses to be caught naked into jobs number. The foreign desks are still on the other side. They push their bet against the index a little deeper. Now net short about 2,06,000 contracts, and they stayed net sellers of stocks in the cash market. Leaning down, still defensive, and every day's crowd long the market, and they have sold a huge pile of protection, nearly 7 lakh contracts. to earn little income. That works beautifully on a calm day. It is the exposed side if tonight's number goes the wrong way. So the read is simple, guys. The pros are long but hedged, the foreigners are short, and the crowd is long and unprotected. The smart money is paying for the insurance, the crowd is selling it. Hold that thought. So, where does that leave the levels? So, starting with Nifty, 24,000 has flipped its job. Last week, it was the resistance overhead. Now it's the floor beneath us, so it acts as a support. And after today's gap up, it is the support we are opening a full 150 points above. So the line that matters on the upside is 24,200. The next big cluster of selling bets OI that is present. A clean push through 24,200 really needs a friendly jobs number, so that move a Friday story than today's story. On the downside, this is exactly where buy on dips would work. A pullback towards 2450 to 24,100 is a level to lean on, not to fear. As long as 24,000 holds on a closing basis, that's your stop loss level. Only a close back below 24,000 puts our 23,800 back in the picture. Until then, we are clear till 24,200. Now the Sensex, because today is weekly expiry and the gap up changes the whole story. It Sensex closed as 76,922, just under that 77,000 mark. But this morning it sets to open above 77,000, and 77,000 is the big line. So open and hold above that 77,000 turns from ceiling to the support. The settlement gets pulled up towards that 77,200 to 77,500 zone, with 77,500 the next resistance overhead. Slip back below 77,000, and 76,700 to 76,500 is the support that comes into play. So the entire Sensex expiry today hinges on one question: does it hold above 77,000? If yes, we are having an expiry between 77,300 to 77,500. And remember the fear gauge, the market's price of insurance. It is still extremely low. That is VIX around 13. Remember that it matters for today's plan. And I'll tell you why right now. So, my plan for today is simple, guys. We are gapping up about 24,000 and 77,000 on Sensex. So my base case is constructive, and 77,000 is now firmly the support on Sensex and 24,000 on Nifty. But here's the discipline: I am a buyer of dips, not a chaser of gap. I don't buy the first green candle 150 points higher. I let it open, settle it, and I look to add on pullbacks towards that 24,050 to 24,100 level. And that's where the reward to risk lives. So, Sensex, I would buy around that 77,100 to 77,300 mark, with 24,000 as my line in the sand and 77,000 for Sensex. 24,000 is the cap for the day. So, and on Sensex, hold above 77,000, and the expiry would drift towards that 77,300 to 500 mark. Lose it, and we would see 76,700 is the net. I am trading lighter than usual. Here's why: the real move isn't today, it's tonight. When that job number hits and it plays out tomorrow morning, today's session is the market holding its breath. So I'm not chasing a breakout above 24,200. That decision belongs to tomorrow, and I am keeping my protection on, not selling it because the insurance is priced for exactly this kind of event. My systematic read agrees with the split and keeps showing constructive on the broader market. The smaller names, auto, consumer goods, financials, all strong and still cautious on IT, which is nursing a fourth day of losses and needs the bleeding to stop. If IT steadies today, we press 2400. If it makes fresh low, 24,000 is our support. On the line to close this setup, a gap up into Sensex expiry, a jobs number waiting for tonight, and a rupee sitting weak on 95. That's a day to buy on dips. Respect the range. Keep your protection on and let tonight's number, not today's tape, dictate the big call. That's your edge for today's guys. If this added value, share it with one trader friend who needs it right now. Subscribe on Apple Podcast, Spotify, or stream it live and first on rupeecase.com. I'm building Rupeecase, India's first systematic investing terminal, which outperformed once again yesterday as well. So you just got earlier, guys. See you all once again tomorrow. Have a very happy expiry.